Great. Thank you all. So for those of you who are not familiar with me, my name is Sandy Kaiser. I am the Employment First Specialist with the Division of DD, and I have invited a guest panelist with me. I will let her introduce herself here.
My name is Jennifer Seidel, and I'm a benefits specialist with ETOS in Kansas City.
So, and today we're going to be kind of introducing some benefits planning concepts and terminology, providing you kind of that high overview of the differences between SSI and SSDI. So real quickly, like we always like to do, we like to start off kind of getting a feel for who's in the audience. So we're going to have a poll that will run for about 60 seconds. So it's going to be pretty quick here, folks. So let us know what your role is. Support coordinator, service provider, other regional office employee, maybe you work for another state office, or you're an individual family member, or some other role. So you've got about 45 seconds left. All right, and the time's up. And most of us, at least half of us, are support coordinators. There's a little smaller number of service providers. We do have some regional office employees with us. So thank you for joining us. We hope you get out of this what you were looking for. So what are we going to be talking about today? So for today, we wanted to provide that high-level overview of SSI versus SSDI. So kind of what are those basic requirements for SSDI or SSI? What are the difference in medical coverage for each of those benefits? What are the effects of income on these benefits and the effect on medical benefits? And then just kind of, again, teasing you with some quick examples of work incentives. So just the terms kind of thing. So kind of setting the stage, what we know. So we know that more people with disabilities live in poverty than anybody else. So I want to say, depending on which source you look at, sometimes I see at least half, sometimes I see 3 times as many. So again, that's what we know. More people with disabilities live in poverty than those without disabilities. Work incentives are underutilized, and what you'll see just from a little taste today, work incentives can really help individuals kind of earn more and still maintain those needed benefits. So that fear of losing benefits is one of the biggest barriers to employment for people with disabilities. And the other thing that we know, individuals who have experienced an unexpected or an unpleasant consequence are much less likely to be open to working in the future. So our hope today is by providing you all some knowledge that we can avoid those unexpected, unpleasant consequences. So we want to help more individuals feel free to explore employment and not have to fear losing those benefits. And again, we want more people to be understanding how they can try to be more financially self-sufficient as well. So raising the quality of living for individuals. All right, so some basic terms that you are going to hear about today and in our future discussions. SSA, which usually refers to Social Security Administration. SSI usually refers to Supplemental Security Income. And SSDI refers to that Social Security Disability Income. And SGA refers to that Substantial Gainful Activity. TWHA refers to that Ticket to Work Health Assurance. This is Mo Health Net's Medicaid buy-in program. And then the last one that you'll see a lot, FBR, which stands for that Federal Benefit Rate. All right, so now jumping in and talking about some nitty-gritty details. So eligibility requirements. So for SSI, you have to meet Social Security's definition of having a disability or being at least 65 years of age. So for what that means for individuals who are 18 and older, just having a disability is not enough to qualify for Social Security benefits, whether we're talking about SSI or SSDI. So to be eligible, one's disability has to be severe enough to impede one's ability to engage in substantial gainful activity. And Social Security does a wonderful job of fully embracing employment first. So they often believe everyone can work and earn at least $1,350 a month, unless you can prove otherwise. So just having a certain label alone doesn't prove that. You have to have documentation showing how that disability is impeding that person's ability to engage in earning at least $1,350 per month. So the other thing to note is that those individuals who are 65 and older, regardless of whether or not they have a disability, can possibly qualify for SSI. So liquid assets of no more than 2,000. So what you'll notice here, the asset limit for SSI is a little bit more strict than the Medicaid asset limit. So for SSI, you have to have assets under that 2,000. Countable earnings for substantial gainful activity of $1,350 per month. Again, individuals who are blind, they don't have to meet that requirement. They have a higher threshold. So this kind of, again, goes to the severity of that disability. Once an individual qualifies for SSI, once they're determined eligible, then that substantial gainful activity doesn't apply anymore. So, and Jennifer, you want to tackle SSDI?
Yes. So one of the things I like to say about SSDI that kind of helps me know the difference between SSI and SSDI is the I in this one stands for insurance. So when you think about insurance, you think about kind of having to buy into something or pay into something. And so that's the way SSDI works. Not only do you have to meet Social Security's definition of disability, just like with SSI that Sandy already went over, you have to be able to meet one of the other following criteria. You personally have to have worked and paid into the Social Security system by paying Social Security taxes and earned enough work credits to qualify on your own work record, or you have to be an unmarried adult disabled prior to the age of 22 who has a parent who's paid into the Social Security system and that parent is either retired, disabled, or deceased. So if they're still working, you have both parents still working, then that adult child isn't eligible to qualify yet. You have to wait until the parent is either retired, disabled, or deceased. And there is a few other options, such as a disabled widower, but typically we don't see that as often with the people that we're supporting, so we're just focusing on those right now. And then again, that SGA comes into play, and the person's countable earnings have to be below SGA in order for them to qualify for SSDI, unless they are blind or visually impaired, according to Social Security's definition of that, and then they could earn $2,260 a month. That's how you can kind of tell the difference between the two.
So another thing that I have heard reference with SSI versus SSDI that kind of helps put things into perspective. SSI is going to be needs-based, meaning you have to meet income and asset eligibility. SSDI, on the other hand, is really an income replacement. So it's meant to help individuals that have been working and engaging in that work activity that through no fault of their own, no control on their own, end up experiencing a life-altering event that kicks them out of the workforce, so to speak. Changes their ability to engage in that work activity that they were engaging in. So just something to keep in mind. SSI needs-based, SSDI work or income replacement. So now let's move on to that medical coverage. So individuals who have SSI, that supplemental security income, more often than not, are also going to be eligible for Medicaid coverage. So, and kind of in that box down at the bottom, you'll notice the difference in asset limits for those with SSI and those with Medicaid alone. So Medicaid asset limits are now continuing to increase each year based on cost of living adjustments. Right now, the current asset limit for Missouri Medicaid or Missouri Health Net is $5,035 per individual or $10,070 per couple. That amount could possibly change every year in July. So July is the time when they look at that and make changes. So note that. SSI, on the other hand, asset limit is $2,000 per individual or $3,000 per couple. So, and Jennifer, asset limits for SSDI?
There are no asset limits for SSDI, which is great. So the only time you have to really worry about an asset limit is if you are applying for or want Medicaid with your SSDI. So when we think of health insurance coverage and SSDI, we typically kind of pair that with Medicare. So after someone has been determined eligible for SSDI, there's a 24-month waiting period. After that waiting period, then they automatically become eligible for Medicare. And so then they get to have the fun time of trying to decide which type of Medicare that they want to have, but that's a whole nother discussion. So Medicare goes with the SSDI. Again, doesn't mean that the person can't have Medicaid, but they would have to apply and they have to meet that resource cutoff of the $5,035 for an individual. And then if their income is over the Medicaid income limit, they may have it with a spin down, or again, if you're working, they could possibly qualify through the buy-in program, better known as Ticket to Work Health Insurance.
And as Jennifer mentioned, just again pointing out, like SSDI, Medicare has no asset limit either. So SSI and Medicaid, asset limits because they're needs-based. SSDI, Medicare, no asset limits. So now let's talk about the effect of income on cash benefits. So with SSI, I often say it's like being on a teeter-totter or a seesaw. As one goes up, the other's going to go down. So what you're going to see with SSI, the amount that they're receiving in SSI is going to change based on other income that that person is receiving. So those monthly checks may get reduced if the person then starts engaging in work activity and is receiving earnings from work. So how SSI counts income is different. So they count one way for unearned income than they do for earned income. In our examples here, we're kind of talking about how that earned income impacts SSI. So SSI is going to reduce $65. They call that the earned income exclusion. If that's the only other income source that the person has besides SSI, so if the person's got SSI and then they're also getting work income, they may have an additional $20 subtracted from their work income. Then whatever's left, for every $2 they earn, their SSI is reduced by $1. So we usually tell people you figure out about half of your work income is going to impact your SSI benefit. So Jennifer, you want to tackle SSDI?
Yes. So with SSDI, to me, it's always a little bit easier to for people to budget because they know with their SSDI benefit, they're either going to get their full amount or they're going to get nothing at all. So there's no up and down like with the SSI where people always get anxious and they think, oh, I'm losing my benefits or my benefits are decreasing. It doesn't work that way with SSDI. You either get the full amount you're supposed to get or you get zero. And that's determined based on whether or not Social Security feels like you're earning SGA amount, that $1,350. So there are a few work incentives that are taken into consideration before they make that decision. The first one is what they call the trial work period. And that is 9 months that Social Security says, you know what, it doesn't matter how much money you earn, but as long as you're earning over $970, then we're going to count that as one of your trial work period months, but we're still going to give you your check. So, so that's the one thing. You either get all or nothing unless you're in your trial work period month, and then you get the full amount. And then they have a 3-month grace period. So again, during that 3-month grace period, after you've used your trial work period months, you're still going to get your benefit check. Now, once you've used those two things, the trial work period and the grace period, you're going to go into a new phase called extended period of eligibility. That lasts for 36 months. And during that time, Social Security is going to be carefully looking at that person's income to determine whether or not they're earning SGA. Now, Social Security will tell you always, SGA is not just a number, but for today's purposes, we're going to talk about it like a number. And so we know if someone is earning under SGA, they're going to get their full benefit check. We know if they're earning over SGA, there's a good possibility they may not get their check, which means they're going to get zeroed. So not just part of it, they'll lose the full amount. So that's the big difference between SSI and SSDI.
All right, so now moving on and talking about the effect of income on medical benefits. So with SSI, The main thing to note here that is if your cash benefit ends due to work income. So the person is making so much in earned income that their SSI has gone down to zero. That person may be able to keep their Medicaid coverage under what we call the 1619B status, provided that their total work income is not exceeding $47,856. So that's the thing that we really want to make sure people are aware of, that they do not have to choose between Medicaid and work. If their earnings are too high for SSI, but they're not over that 47,856, then there's a very good chance that they may qualify for that continued Medicaid coverage at no extra cost for them. Now, let's say for some reason that they don't qualify for that 1619B status. So maybe their asset limits go above 3,000, or maybe they, before their SSI went down to zero, maybe they started qualifying for SSDI and then their SSI stopped because they were getting SSDI. Individuals can possibly continue their Medicaid coverage under the Medicaid buy-in program known as Ticket to Work Health Assurance. So again, something to make people aware of. They don't have to choose between medical and work. So Jennifer, you want to tackle the SSDI?
Yes, so with SSDI, again, remember Medicare goes along with that. And there's some things that they have decided to kind of extend out someone's eligibility for Medicare even after they start working and even after they start earning over SGA. So it's not the same number of months for every single person because there's a few factors that play into it. We don't really want to get into that today because it's too complicated to really think about right now. So the one thing we want to make sure you understand is that at least for 93 months after someone begins working, that they will be able to continue their Medicare benefits. So so even if they're not getting their check because they're earning SGA, they will be able to continue the Medicare for at least 93 months. Now, keep in mind, if someone is earning under SGA, Medicare is not, it's not even on the table that the Medicare is going to go along. As long as they're earning under SGA, they keep the Medicare. So and then after the 93-month period ends, the person still has the option to keep the Medicare by paying for those premiums. Since they won't be getting an SSDI check anymore, it's not going to be able to come out automatically, so they would have to physically actually pay the monthly premiums to be able to keep their Medicare coverage, but that is an option for people to do.
All right, so moving on to some examples of work and incentives that you might see based on what type of Social Security benefit the person receives. So for SSI, some of the common work incentives that we see: impairment-related work expenses, also referred to as IRWEs. PASS plans, so plan for achieving self-support. There is also the property essential to self-support PASS. This is for individuals that are looking at self-employment. Student earned income exclusion for those who are under the age of 22 and still in school. Blind work expenses. And then expedited reinstatement. This is where benefits can quickly be reinstated if necessary. So if somebody has had where their benefit has stopped, their cash benefit has stopped, And then because their work income changes, now they're below that amount. And they need their Social Security benefit back. They can quickly get their benefits back under that expedited reinstatement of benefits. And these are things that we will probably go into more detail in the months to come. So Jennifer, do you want to handle SSDI?
Yes, we've already kind of talked about most of these on this list, but these are the work incentives for SSDI. The first one is the trial work period. Again, that's $970 a month or above. If you earn over that, that counts as one of your trial work period months. So the cool thing about the trial work period month is it doesn't really matter how much money you earn. During that phase, you will still get your SSDI check. And then we have the extended period of eligibility. That's what comes after the trial work period phase. And that's where you can continue to get your SSDI benefit on the months that your income is below SGA. But if you happen to have a month where you earn above SGA, then you wouldn't get your SSDI payment. Then we have impairment-related work expenses. Again, it's very similar to the SSI. If you have an expense that's specifically related to your disability and something that you need to pay for to be able to work, then you can provide that information to Social Security, and they will take that into consideration when they are trying to determine whether or not you're working at SGA. We also have things such as subsidies and special conditions. Those are, again, some special circumstances that we're going to go into more at another time in a different webinar. And then finally, expedited reinstatement, which is that option to be able to quickly reinstate benefits if something happens to the job that you're working and they have a loss of income.
Okay, so kind of a cheat sheet to help you kind of understand the basics of SSI. So what is it? It's that cash benefit based on financial need. So you keep hearing me say needs based, must meet income and asset limits. So who can get this benefit? So you have to be considered disabled according to Social Security's definition. And again, just having that label is not enough. Social Security is looking for that disability being severe enough that it is going to impact one's ability to engage in that substantial gainful activity. So also you can get it if you are 65 or older. So you must have a lack of assets. So assets must be below that $2,000 limit. Also low income. So they're looking at that countable income being below $841 per month. So the amount that one is going to get is going to be based on that federal benefit rate. So again, the maximum for this year is $841. That's the most anybody can get in supplemental security income. And it's also reduced by other income as well as assistance with food and shelter. So when is the benefit paid? It usually comes on the first of the month, except the one exception would be is if the first of the month falls on a weekend or a holiday, then you'll see it on the last business day of the previous month. So for example, January 1st, it's a holiday. Most people are receiving their SSI benefit the last business day in December. So the health insurance that comes with that benefit is typically Medicaid, your Mo Health Net. Thing to note here is that you have to apply for it separately. So other things to note, if somebody is married or under the age of 18, their parents' income or their spouse's income and assets will also be counted. So now what happens when that person receiving SSI goes to work? So as we mentioned earlier, it's like being on that seesaw. As one goes up, the other's going to go down. So as somebody starts earning some work income, their SSI is going to be decreased by that earned income increase. So typically the first $65 and sometimes an additional $20 is subtracted. And then with the remaining wages, it's divided in half. So in our example here, somebody earns $1,299 from work income. Only 607 of it is going to be considered countable income. So then that person's SSI benefit will be reduced by $607. So if that person is earning or is getting the full $841, we would take 607 from that $841, and that's where we came up with, oh, they'd still get $234 in SSI. So $234 in SSI plus that $1,299 in work income, this person now has $1,533 of which to then meet their expenses. So again, greater financial security here, financial independence. So one of the things that people get concerned about is that if their SSI goes to zero, they're losing their Medicaid. And what you can see is, no, that's not the case. If somebody's SSI goes to zero just because of work income alone, their SSI claim stays open as long as they still meet the other eligibility criteria. So they still have to keep their asset limits below 2,000. They still have to keep in contact with Social Security. They have to respond to inquiries and other things that Social Security might need of them. So they do that, then they can restart their SSI easily when needed. So again, they continue to have that disability, assets below 2,000, they need Medicaid, they would get SSI if no work earnings. So, and as long as their annual earnings are below that 47,856, then they're still keeping that access to Medicaid. So things that you may want to watch out for is people saying my SSI goes down when I have work, so I have less money. Again, from our example, you can see where individuals have more money to make ends meet. And then again, it's not true that if they lose their SSI because of work income, that they'll lose their Medicaid. So the thing to make sure people are aware of, they don't have to choose between their SS or their work and Medicaid. So if their SSI goes down to zero because of work income alone, they can continue that Medicaid coverage. And now I'm going to let Jen tackle SSDI.
All right. So again, remember, we're just recapping what we've already gone over a lot already. And first of all, what is SSDI? It's a cash benefit based on Social Security work record. So that's the key. It has to be based on someone's work record. Who is able to get this? You have to be disabled according to Social Security's definition, and you have to have paid enough taxes to reach disability insured status. And remember, we did talk earlier about how that could be a parent or a spouse for the case of a widower who has worked and earned that status. So somebody has to have earned the disability insured status. So how much is the benefit? So the average benefit for SSDI for 2022 is $1,358. Now that doesn't mean that's how much someone's going to get. because it's based on the amount of taxes that they personally or their parents have personally paid into the system. So Social Security looks at that, and they have a formula for figuring out what each person's benefit is. So clearly, if you haven't worked very long, or maybe you have a lower paying job, then your SSDI benefit is going to be lower than someone who's worked, say, 25 years and whose income was maybe $75,000 a year. They're going to have paid a lot more taxes into the system. So their SSDI benefit amount is going to be higher. So it's based on how much the person has paid in over their work time. So when will the person receive the benefit check? Typically is the 3rd of the month for most people. So again, it's one way you can kind of tell whether someone's getting an SSI check or an SSDI check is when it comes. You don't ever want to just base it solely on that, but it's a good indicator. And again, what health insurance comes with this benefit is Medicare after the 24-month waiting period. And keep in mind that there is no asset limit. And also when they are looking at that SGA, I just want to point out that is earned income only. So other income is not counted when they're looking at that. Even if it's income that's earned it has to be income that's earned from working. So it wouldn't count things like vacation pay or sick pay or something like that. It's income that you've earned by working. So that's the other thing to look at with that. All right, so what happens when you go to work? Remember, SSDI is all or nothing when it comes to your check. You'll either receive the entire SSDI benefit amount or you will receive 0. So you want to be able to create a plan to work and get ahead. When your earnings are below SGA, so if your earnings are below $1,350, then you're going to get your SSDI benefit check plus your earnings that you make by working. So those two are added together. If your earnings are above SGA, unless you're utilizing some work incentives, then you're not going to get your SSDI check. You will only get your earnings. So the example here is we have someone earning $720 a month. So clearly they're working a part-time job. That's clearly below SGA. And this person's SSDI benefit is $925 a month. So you add those two together and you have their total income of $1,645 because they get both checks. Now, here's the part I want you to kind of think about and where someone can sometimes get into a little bit of trouble and actually may have less money by working. Remember that SGA amount of $1,350. Let's say somebody gets a job and they're earning $1,500 and they're not taking advantage of any work incentives. If that's the case and Social Security decides that they are not going to be able to get their benefit check anymore, then all they have is the $1,500 to live on, and they aren't going to be able to get their SSDI benefit check. So you could see, like from this particular example, if this individual earned $1,500, they wouldn't get their $925, and their total income would only be $1,500. So they've actually lost money in this particular case. So this is why it's important that someone receive benefits counseling to kind of realize that, hey, I'm only earning slightly over SGA. Maybe I better look at those work incentives, because if maybe I have some impairment related work expenses, I can get them to see that I'm working below SGA and still keep both the benefit check and your work income. So this is where it's really critical that we look at those things. Fact number 2, keep, or restart. You can keep your Medicare and possibly that Mo Health net, even if your SSDI stops. So remember, that goes back to that keeping your Medicare for 93 months. You also can keep your SSDI a cash benefit when earnings are above SGA in some situations. So those again are a lot of times based on those work incentives, and if you're reporting that information to Social Security so that they can review those things. And also, you can quickly restart SSDI if for some reason work stops. So that's a real big relief to people to be able to get that income to get restarted quickly. So myths to watch out for: I'll lose SSDI or I'll have less money if I work. So that's not true. You can see from the example above that we used in the case of the person earning $720, they were able to keep and have more income. You just have to watch for being over that bubble and not using work incentives where you can maybe fall into that trap. And then the other myth to watch out for is I'll lose Medicare if I work. And again, that's not true. Our government has built in some systems, some safety nets to keep that for an extended period of time. And then once you're outside of that window of time, you still have the option to pay your premium and keep your Medicare, even if you don't have other insurance. So.
Jennifer, we did receive a question in the chat box about ticket to work health assurance. So I wonder if you want to kind of touch that a little bit. Specifically, the question was, how do participants know to apply for the ticket to work health assurance?
Right. Okay. So if their income is over the Medicaid income limit, which is, it might have gone up now. It was 913. Did it go up yet? I can't remember. I have to look at that again. But if your income is over that, you definitely want to be doing the ticket to work health assurance, because you don't want to have a spend down for your Medicaid if you can avoid it. The nice thing about Department of Mental Health and Department of Social Services, they've provided us a calculator that we can actually put people's income into, and you can put in any unearned income that person has as well, and it'll tell you whether or not that person is eligible for ticket to work health assurance, and if they are, what their premium would be versus what their spend down would be. And this calculator is called a spend down and ticket to work health assurance calculator. I use it all the time when I'm working with folks. So it's pretty easy once you get the hang of it. And they have a few different lines where you put that information in, depending on, they want to know if it's workshop earnings or regular earnings. And so you just put those numbers in and you can get a pretty good estimate whether or not it's going to be helpful to use the ticket to work health assurance. If you decide, or the person decides that that is a better fit for them, then all they have to do is notify the Department of Social Services in writing. Is usually the easiest way, so you don't have to wait on the phone forever. But you can put it in writing that you would like your earnings to be evaluated for eligibility for the ticket to work health insurance program, and then they can make that change over. And for folks within the DMH system, we're often able to kind of help with that by giving a heads up if you're having trouble with that.
So, and I did put the link to the calculator in the chat box, so you guys should be able to see that. And I know there was questions about the amount. So Jen, you were kind of wondering, it's like, okay, usually that amount goes up in April. I haven't seen any announcement that has gone up yet. So right now, as far as I know, it's $913, but expect that we could see an adjustment in sometime in April.
That's what I was thinking too. So
So we have some examples here to kind of just give ourselves a little bit of practice identifying that Social Security benefit. So Jody receives $560 in a Social Security benefit. She lives with both of her parents who both work full time. Jody's 20 years of age and has been receiving this benefit for approximately a year now. And she started receiving the benefit last year when she graduated high school. She's not working yet, but she has been participating in pre-vocational services. So based on what we know, what Social Security benefit do you think Jody currently receives? And for those of you who are not familiar with how I like to do these webinars, I don't move on until I see at least one answer in the chat box. Okay, we've got a response. And so let's check our answer. And you are correct, SSI. So our clues here was that Jody herself did not have any work history. Both parents were still working. And if you were slick enough, you probably noticed she wasn't getting that full federal benefit rate. The amount that she was actually getting is 2/3 of the federal benefit rate. So if you remember early on, I said that one's income, both earned and unearned income, plus one's assistance with food and shelter could affect how much somebody gets. So basically, probably what's happening here is Social Security is saying that the parents are assisting with food and shelter costs. Therefore, Jody is not entitled to that full federal benefit rate. All right. So moving on to our next example. Jen, would you like to introduce this?
All right, so Jake receives $960 in a Social Security benefit. He started receiving this benefit 3 years ago after having been employed for 5 years. Prior to this, Jake was receiving only $771 in a Social Security benefit. Jake also has Medicare coverage in addition to Medicaid. What Social Security benefit does Jake receive? And Catherine says SSDI. Let's see if she's right. So yes, Jake most likely receives SSDI. So our clues in this were that he has a work history. That's a requirement, unless it's based on a parent's work history. And he receives more than the federal benefit rate of $841. So if somebody's getting more than $841, it can't just be SSI. And then finally, he has Medicare. And we know that in order to have Medicare, you've got to be getting that SSDI benefit.
All right, so here's another one. Cale has been receiving $794 in a Social Security benefit. His Social Security benefit is now less as Cale now has a part-time job making approximately $1,200 per month. This is Cale's first job, and he has only been employed for about 6 months. So based on this information, what Social Security benefit do we think Cale receives? Okay, it looks like we've got somebody saying SSDI. So let's see if we're right here. Cale most likely receives SSI. How do we know this? Because his benefit was reduced by his work income. So remember, SSI is going to be like on that seesaw, up or down. SSDI is going to be an all or nothing thing. You're either going to get it or you're not going to get it. So the fact that his benefit has been reduced, but he's still receiving it, tells us we're probably dealing with an SSI benefit. The other thing here is, if you notice, Cale is making less than that substantial gainful activity amount. And that's the trigger for what decides whether or not somebody is going to get that SSDI benefit. So SSI, again, any amount of income could affect it. SSDI, only those individuals earning at or above that substantial gainful activity amount might see their Social Security benefits stop. All righty. Moving on to the next one, Jen?
All right, Callie has been receiving $800 in a Social Security benefit. She obtained a job in February, making approximately $970 a month. She still receives the $800 a month in Social Security benefits in addition to her work income of $970 a month. What Social Security benefit does Callie receive? SSDI. Yeah, Jasmine got it. All right. And so the clues are Callie still receives her Social Security benefit despite her work income. So that amount didn't change any. She's still getting that full benefit amount that she was receiving before. And Cassie's work income is below SGA of $13.50 a month. So those are our clues for that one.
So Jennifer, we also had a question in the chat box during this little exercise. How do we prove work incentives?
So, like, depends on which work incentive you're talking about. If you're talking about the impairment related work expense, you're going to, I think they do have a form you can put it on. I don't think you have to use the form, but basically you're going to be submitting those receipts and explaining why you feel like that's an impairment related work expense. So you've got to be able to show that it's an expense specifically related to that person's disability and allowing them to work. So like you can think of it like this. If somebody has to have a pair of non-slip shoes to work at McDonald's, that's not an impairment related work expense because everybody needs, that's part of their work uniform. Everybody needs non-slip shoes. That's not an impairment related work expense. But if the person, let's say that they are unable to drive because of their disability and they have to pay for transportation. And so maybe they pay $5 a ride for a total of $10 a day. By the time you add that up over the month, that could be quite a bit of money. And that allows that person to be able to submit that to Social Security. That's going to impact their SSI benefit. It's not going to go down as much because they're going to take that into consideration. For SSDI, they're actually going to use that when they're looking to determine whether someone's earning SGA or not. That's why they say it's not just a number, because just because someone earns SGA doesn't mean they automatically lose their benefit. If they can show that they're using impairment related work expenses or one of the other work incentives, such as the subsidy from an employer. And that has to be, information has to be provided from the employer to Social Security for them to be able to make that determination.
All right, thank you. So, providing you all with some resources of where you can learn more. So, on our website, back in 2018, the division hosted a 5-part benefits planning series in the summer of 2018. So, from July 10th through August 6th, each week we had a 1-hour webinar on benefits planning. So, using that link on that on that slide, you can access those webinars. Virginia Commonwealth University also has an introductory web course. This is about a 6-module course. It's usually available for a 2-week period. So during that 2 weeks, you can access those 6 modules at any time. They're not at special times. So just during that 2-week period. And then of course, we also have our DB 101 website, which has a great deal of information for you. So, and Jen, you want to take this slide?
Well, let's see. Tips available on the DMH website. So I'm not really sure what that first one is, just the, you
So
might want to
I'm
take those,
sorry, Jen.
Jason.
I
I
flipped
mean,
on that one. I should have had you
yeah,
do the first slide. So I apologize for that. I am out to
okay,
lunch today. Okay,
that's all
so
right.
the tip sheet. So the
Follow the links. You'll get the tips.
easy guide managing employment and benefits tip sheet is providing you information about, maybe what benefits planning is, when you might need to reach out to a benefits specialist, and how you can get connected with those benefits specialists. So the other one on that Social Security benefits and employment tip sheet, that is kind of a side-by-side comparison. It gives some practical tips for beneficiaries, such as knowing what type of Social Security benefit you have, knowing what the rules are associated with that benefit, and then knowing about the work incentives that apply to that benefit. And then again, it provides that side-by-side comparison of the work incentives that are available under SSI versus the work incentives that SSDI recipients might be able to utilize. And then, of course, again, provides you some additional resources of where you can learn more. And then that last one, changing the culture and message about benefits. Uh, this is just kind of some guidance, some ideas of how we as support coordinators and other professionals can go out messaging to individuals. Again, the things that we want to make sure that people are aware of, they do not have to choose between working and needed benefits. But having that good guidance to know about what's going to happen and when it's going to happen is going to help avoid those unpleasant, unexpected consequences. So I do see a question in the chat box about do benefit specialists work with individuals applying for benefits like SSI and SSDI and or Medicaid? So Jennifer, you want to handle that one?
That's all going to depend on the benefits specialist that you're talking to. So if you're talking about the DMH funded services, I don't believe that they would actually help with those applications. Sandy, you can correct me if I'm wrong. Now, like in the role that I have at ETOS, I do assist with it to a certain extent, but primarily my role is on providing the information that the individual and or their family member needs to be able to navigate that system. It's really important that people understand their benefits, because when you don't understand your benefits is when you're more likely to have problems. So kind of like we were talking about those unpleasant experiences, knowing what's expected of you and what your role is when you start working, knowing the importance of reporting those earnings to Social Security, because when you don't do those things, that's when trouble happens. So it's really important people understand their role. And so to me, a benefit specialist is really there not necessarily to like get it all in line for them, but help them understand the process a little bit better and support them through that.
And I would have to agree with you, Jennifer, that typically benefit specialists, because we have been educated in the eligibility criteria for Social Security and Medicaid, we can help inform individuals about the criteria, but the actual helping them with applying for that service, typically that is going to be done by somebody else. So, support coordinators helping people apply for benefits, or kind of connecting them with another resource that can help the individuals apply for resources. That would probably be where we go. All right, we are right at 2:30, so I know that's the end. So as we kind of mentioned earlier, this is just the start of this discussion. So the next 2 months, we are definitely going to be taking a deeper dive. So probably for May, we might be going into one of the Social Security benefits. And then in June, we will be talking about the other Social Security benefit. So be on the lookout for more information about that. And then, of course, we look forward to seeing you. So again, second Wednesday of each month, May 11th, June 8th, July 13th, those are the next dates. And I can tell you for certain that at least May 11th and June 8th, we will be taking a deeper dive into each of the Social Security benefits. So don't forget, when you get off, please respond to that survey. That helps us with making sure that you guys are getting the most out of this and that we are providing a good quality webinar for you. And anytime, feel free to reach out to me. My number is 636-926-1229. My email is sandy.kaiser, and that is spelled KEYSER@dmh.mo.gov. So thank you all for joining me.